Hello and welcome to a new video. Today we will discuss the impact tariffs will have on Nvidia and Apple. We will start with Nvidia's tumultuous 2025, navigating geopolitical storms and shifting trade winds. Before we start, we would like to thank you for watching. If you enjoy our content, please consider liking and subscribing. The year 2025 has presented a formidable landscape for the semiconductor giant Nvidia, NVDA, a stark contrast to its blockbuster performance in 2024. The company, a linchpin in the artificial intelligence revolution, finds itself increasingly entangled in the complex web of international trade disputes and evolving regulatory frameworks, leading to significant challenges that have manifested in a notable downturn in its stock price. The most recent blow came with the disclosure that the Trump administration will mandate export licenses for the sale of its advanced H20 chips to customers in China, effectively severing a crucial artery of its global sales network. This directive from Washington carries a substantial financial implication for Nvidia. The company anticipates booking a significant $5.5 billion charge in the first quarter of 2025, directly attributable to the H20 product line and existing purchase commitments. This financial hit arrives at a particularly sensitive juncture, coinciding with President Trump's anticipated imposition of tariffs on semiconductors imported from overseas. This broader tariff policy extends its reach beyond individual chips to encompass devices integral to Nvidia's consumer and enterprise sectors, such as laptops and desktops, thereby threatening its gaming and graphics chip sales as well. Adding another layer of complexity to Nvidia's operational environment are the impending AI diffusion export controls, slated to take effect in May. These regulations establish a three-tiered system governing the accessibility of advanced AI chips to different nations. Certain countries will enjoy relatively unfettered access, while others will be subject to licensing requirements for a limited quantity of chips. Notably, China falls into the most restrictive category, facing a complete embargo on these critical technologies. This multi-layered approach to export control underscores the growing geopolitical significance of AI and the strategic imperative of safeguarding technological advantages. The confluence of these challenges has exerted considerable downward pressure on Nvidia's stock performance. As of late Thursday, shares had plummeted by 24% year-to-date, with a further decline of over 6% in the preceding 5 days alone. This erosion of investor confidence reflects the market's apprehension regarding the immediate and long-term implications of these regulatory headwinds on Nvidia's revenue streams and profitability. Despite this turbulent period, glimmers of resilience remain for the company. Its cutting-edge Blackwell series of chips continues to garner strong market traction, fueled by the insatiable demand from technology companies engaged in the massive undertaking of constructing data centers to power their burgeoning AI platforms. However, the robust performance of the Blackwell line has thus far proven insufficient to assuage the overarching concerns of investors grappling with the broader geopolitical and regulatory uncertainties. The Trump administration's decision to impose stringent export controls on the H20 chips destined for China was seemingly triggered by revelations from DeepSeek, a Chinese AI company, which disclosed the use of Nvidia chips, albeit below the top-tier offerings, in the training of its powerful AI models. This disclosure ignited alarm bells in Washington, where policymakers harbor concerns that China could leverage these advanced technologies to accelerate its progress in the global AI race and potentially gain a military advantage over the United States. Consequently, Nvidia now faces the unenviable task of absorbing the financial burden associated with the H20 chips originally earmarked for the Chinese market. This will not only negatively impact the company's bottom line in the first quarter of fiscal 2025, but is also projected to cast a shadow over its financial performance for the remainder of the year. China represents a substantial portion of Nvidia's global sales, accounting for $17.1 billion in fiscal 2025. While the United States remains its largest market at $61.2 billion, followed by Singapore, $23.6 billion, and Taiwan, $20.5 billion, the loss of a significant portion of the Chinese market represents a considerable setback. It is worth noting Nvidia's clarification that Singapore's seemingly large share of sales, 18%, is primarily due to its role as a central invoicing hub, with the actual destination of these products being predominantly other locations, with Singapore itself accounting for a mere 2% of sales. Analysis from financial institutions further underscores the potential magnitude of the impact. Vivek Iyer of BofA Securities estimates that the H20 restrictions could lead to a 5% to 8% reduction in Nvidia's fiscal 2026 sales and a 6% to 10% decrease in its earnings per share. Similarly, John Vin of KeyBank had projected H20 sales to contribute approximately $12 billion in revenue for Nvidia through its fiscal third quarter. While he acknowledges that Nvidia likely managed to ship a significant volume of H20 chips prior to the implementation of the ban, the restrictions are anticipated to exert a notable drag on the company's overall revenue. The imposition of the H20 chip ban is particularly noteworthy given Nvidia's recent commitment to invest a substantial $500 billion in AI infrastructure within the United States over the next 4 years. This ambitious plan includes the production of its advanced Blackwell chips at TSMC's facilities in Arizona, signaling a strategic focus on domestic manufacturing and supply chain resilience. Beyond the immediate impact of the H20 restrictions, Nvidia is also bracing for the imminent implementation of the US's AI diffusion rules. These regulations, enacted by the outgoing Biden administration, establish a complex framework for controlling the export of advanced AI chips. The three-tiered system categorizes countries based on their access to these technologies, ranging from unfettered access to complete restriction, with China falling into the latter category. This policy reflects a growing consensus in Washington regarding the need to carefully manage the dissemination of cutting-edge AI capabilities to potential adversaries. However, this approach has also drawn criticism. Republican Senators Roger Wicker of Mississippi and Tommy Tuberville of Alabama penned a letter to Commerce Secretary Howard Lutnick, urging him to rescind the AI diffusion order before its scheduled implementation on May 15. Their argument centers on the assertion that the regulations are excessively burdensome and could inadvertently undermine the competitiveness of U.S. companies in the global AI landscape. This highlights the ongoing debate surrounding the optimal balance between national security concerns and the need to foster innovation and maintain global market leadership. Despite the prevailing headwinds and market volatility, a contingent of analysts remains optimistic about Nvidia's long-term trajectory. This optimism is largely predicated on the company's commanding lead in the rapidly expanding AI market and the enduring strength of its proprietary CUDA software platform, which provides a significant competitive advantage. Furthermore, the United States-Mexico-Canada Agreement, USMCA, offers a degree of insulation, as Nvidia servers manufactured in Mexico are exempt from additional tariffs, which should help preserve profit margins on these products. Stacy Rasgon of Bernstein articulated this perspective in an investor note, stating, "We still believe that overall AI demand from more mainstream customers remains strong, and AI infrastructure in general seems to be more insulated from immediate tariff effects given Mexico-USMCA compliance of much of the hardware as well as, presumably, the strategic nature of the industry with substantial US build-outs coming." This suggests a belief that the fundamental drivers of AI demand remain robust and that certain strategic advantages, such as the USMCA and domestic infrastructure investments, could mitigate some of the negative impacts of the trade disputes. Nevertheless, Nvidia is poised to remain a central player in the ongoing and often unpredictable trade tensions between the United States and China. Each new policy announcement and retaliatory measure is likely to inject further volatility into the market, keeping investors on edge as they navigate this complex geopolitical landscape. The intertwined fates of Nvidia and Apple, two prominent members of the Magnificent Seven, big tech stocks, serve as compelling illustrations of the immediate impact of President Trump's evolving trade policies. Both companies have found themselves at the forefront of these trade skirmishes, albeit experiencing outcomes in recent weeks. The period following Trump's Liberation Day reciprocal tariff announcement on April 2 has been marked by significant volatility for both tech giants, underscoring the challenges investors face in navigating the ever-shifting terrain of aggressive trade regulations emanating from the administration. Initially, Apple bore the brunt of investor concern. With approximately 90% of its iPhones manufactured in China, according to Wedbush analyst Dan Ives, the company witnessed a substantial downturn in its market capitalization in the days following the tariff announcement, shedding as much as $773 billion in value and leading the decline among big tech stocks. However, A subsequent announcement from US Customs and Border Protection late last Friday, granting a tariff exemption for certain consumer electronics, effectively encompassing the majority of Apple's product line, provided a significant reprieve. This development spurred a recovery in Apple's stock price, with shares rising by over 2% on Monday, helping to stem its market cap losses and briefly pushing its valuation back above the $3 trillion threshold. Nvidia, in contrast, experienced a less fortunate turn of events this week. The disclosure on Tuesday regarding the US government's effective ban on exports of its specialized chips to China triggered a sharp decline in its stock price, with shares falling by nearly 7% on Wednesday. While Nvidia's overall market capitalization loss since April 2nd has been smaller in percentage terms compared to Apple's initial drop, the majority of this pain was concentrated in the past week, with its market cap shrinking by 8%, or $230 billion. Over the same period, Apple's stock experienced only a fractional decline. Ruben Roy, an analyst at Stifel, aptly summarized the prevailing sentiment, writing in an analysis on Wednesday, "In our view, this recent development heightens investor uncertainty in an already highly uncertain environment. This underscores the market's sensitivity to geopolitical developments and the potential ramifications for the technology sector." President Trump's trade policy has thus far involved the enactment of a 10% tariff on all global imports, which took effect on April 5. The initially announced, reciprocal, tariffs, slated to take effect on April 9, have been temporarily paused for 90 days, with the notable exception of a substantial 145% duty on Chinese imports. Looking ahead, further uncertainty looms. This week witnessed the Trump administration signaling its intent to specifically target semiconductors with tariffs, following the news of exemptions for certain tech products. The Commerce Department initiated a probe into computer chips under a law granting the president the authority to impose levies on imports deemed to pose a national security risk. Furthermore, Trump has indicated that the majority of electronics will ultimately be subject to his tariff regime, a move that could have significant implications for Nvidia, Apple, and other major technology firms with intricate global supply chains. In a recent post, he stated, "We are taking a look at semiconductors and the whole electronics supply chain in the upcoming national security tariff investigations, signaling a potentially broader and more targeted approach to tariffs in the technology sector." The unfolding trade landscape promises to remain a critical factor influencing the performance and strategic decisions of these tech giants throughout 2025 and beyond. And that's the end of the video. Thank you for watching, and we will see you in the next one.